What happens if you walk away after going under contract? For many buyers and sellers, going under contract marks the moment a real estate transaction feels official. The property is removed from active competition, inspections are scheduled, financing moves forward, and both parties begin preparing for closing. Yet not every contract reaches the finish line. In residential real estate, deals can collapse after a contract is signed for a variety of reasons. Sometimes buyers back out because of financing issues, inspection concerns, or personal circumstances. In other cases, sellers face delays, disputes, or shifting market conditions that complicate the transaction. Understanding what happens when a buyer walks away after going under contract is essential for anyone navigating today's housing market, particularly in regions like Pinellas County, where inventory, insurance costs, and financing pressures continue to influence buyer behavior. What under contract actually means. When a home goes under contract, the buyer and seller have agreed to specific terms outlined in a legally binding purchase agreement. The contract typically includes purchase price, financing terms, inspection timelines, contingencies, closing date, earnest money deposit requirements. Although the agreement is binding, most contracts include contingencies that allow buyers to exit under certain conditions without severe financial penalties. The details of those contingencies often determine what happens next. Common reasons buyers walk away. Not all contract cancellations stem from cold feet. In many cases, legitimate concerns emerge during the due diligence process. Inspection problems. Home inspections frequently uncover issues that were not obvious during showings. Structural problems, roof damage, outdated electrical systems, plumbing concerns, or mold can significantly change a buyer's willingness to proceed. In Florida, especially in older Pinellas County homes, inspection findings related to roofs and insurance eligibility often become major negotiation points. Financing issues. Even pre-approved buyers can encounter financing problems before closing. Job changes, increased debt, lower appraisals, or lending guideline changes may prevent final loan approval. This is one reason financing contingencies remain important in many transactions. Insurance challenges. In Florida's current insurance environment, buyers sometimes discover that coverage is far more expensive than expected or difficult to obtain altogether. Properties with older roofs, prior claims, or high flood exposure may create unexpected insurance hurdles that affect affordability. Personal circumstances. Life events can also interrupt transactions. Relocations, family emergencies, divorce, or financial changes may force buyers to reconsider a purchase even after signing a contract. The role of contingencies. Contingencies are contractual protections that allow buyers to terminate the agreement under specific conditions. The most common include inspection contingency, financing contingency, appraisal contingency, insurance contingency, sale of current home contingency. If buyers cancel within the contingency period and follow the contract terms properly, they are often entitled to recover their earnest money deposit. Without applicable contingencies, walking away becomes more complicated. What happens to the earnest money deposit? Earnest money is designed to demonstrate a buyer's commitment to the transaction. If the buyer cancels legally under a valid contingency, the deposit is typically refunded. However, if a buyer walks away outside of contingency protections, the seller may have the right to keep the deposit as compensation for lost time and market exposure. In Florida contracts, disputes over earnest money are not uncommon, particularly when both parties disagree about whether contract terms were properly followed. Can sellers sue buyers for walking away? In some situations, sellers may pursue legal action. Whether that happens depends on the terms of the contract, the financial damages involved, and the circumstances surrounding the cancellation. In practice, many disputes are resolved through negotiation rather than litigation. Lawsuits can be expensive and time-consuming, making settlement the more common outcome. Still, buyers should never assume they can walk away from a contract without consequences. How contract fallout affects sellers. When a buyer exits a transaction, sellers often face more than disappointment. A failed contract can result in lost market momentum, additional carrying costs, delayed relocation plans, price reductions after returning to market, buyer skepticism about why the deal collapsed, Properties that return to the market after a failed contract sometimes attract additional scrutiny from future buyers. Market conditions influence outcomes. The impact of a canceled contract often depends on the broader market. In strong seller markets, sellers may quickly secure another buyer. In slower or more balanced conditions, however, a failed contract can create longer delays and negotiation challenges. Recent shifts in parts of Pinellas County have produced more cautious buyer behavior, especially regarding insurance costs and property condition. As a result, contingency-related cancellations have become more common in certain segments of the market. Communication matters during the process. One of the most important factors in managing a contract cancellation is communication. Real estate agents, lenders, inspectors, title companies, and attorneys often work together to resolve issues before a deal completely falls apart. In some cases, buyers and sellers renegotiate terms rather than terminate the agreement entirely. Repair credits, price adjustments, or extended timelines may allow the transaction to move forward. The bottom line: walking away after going under contract is possible, but it can carry financial and legal consequences depending on the circumstances. For buyers, understanding contingencies and contractual obligations is critical before signing an agreement. For sellers, evaluating buyer strength and maintaining flexibility during negotiations can help reduce risk. In today's market, where financing, insurance, and property condition all play increasingly important roles, informed decision-making remains essential for both sides of the transaction.